I'm really, really excited today. We have a awesome presentation that's put forth. We have a lot of people that are here maybe for the first time. So welcome first timers and all those people that and the regulars. You can probably tell the ones that are chatty are regular. I don't these type of styles, these presentations. I encourage classroom participation big time. So that's why everybody feels like they have a voice. Everybody should have a voice. Everybody should have their questions answered. This is a great place to learn. Right. Every week we have these every single Wednesday. Same bad time, maybe not the same bad channel, but in Discord I post the event, and so everybody here should be at least in the Discord. So you'll see the event posted up there. You can click on the event and be eligible to come into here. So the format here is that most of the people here, or if you're here for the first time, just kind of bringing you up to speed. The format here is where we are all on this trading journey together, right? We're all trying to be better traders, to learn, grow, and just a community of traders just working together, having fun. So that's basically the format. Every morning, a group of us, we trade live in the markets, and I'm a firm believer, 100% hands down, that you learn more when you teach a principle. And when you get in front of a group and an audience, you teach a principle that either you've learned or that you're trying to work on. And Josh is no different. Josh Hunter is going to be our presenter tonight. He is no different than any other trader out there, other than the fact that he's been trading for a while. I'll let him kind of give a bio, but I've known him for a couple years now, but I've really gotten to know him probably the last year, and his trading has just skyrocketed through the roof. He's learned so much. And I'm really excited for what he has to present tonight, because it's something that, I'm not going to hype it up too much, but it is something that I feel like he's learned, taken advantage of, implemented into his trading, and is now ready to kind of share his secrets of what he found that has helped him out in his trading. And that's what it's all about. What are the secrets that we have? And let's not keep them secret. Let's share them. Let's share them so that everybody can be lifted up and fed together. So
no pressure at all there, David. I'm going to try and live up to some of that. It's like normal, gosh.
Yeah, you do daily. You live up to it daily.
You're on your own.
You're on your own. Yo.
All right, everybody see the hot seat rule of three PowerPoint?
Yep,
I do.
Yep.
Okay.
So we do have a lot of first timers. So if you don't mind explaining like what you mean by hot seat and all that. So if you have anything that you think that everybody the regulars should know, well, just pretend that you're teaching it to brand new people. Okay.
Like, should the screen be blank?
No. Oh, I get it. Jokes.
A lot of comedians here.
Maybe I will use the power of the mute button.
I'm
just kidding. Go ahead, Josh.
Okay, just trying to get my screen situated. If I can do this for y'all. Okay. So the hot seat is basically the event that we have every morning. It's like 2 hours. We have a couple people that we cycle through, like every couple weeks, I guess, that you get in front of everybody, and David kind of facilitates the event. You trade as however you would trade, and David helps you work through it, putting out the things that he sees are causing you to not be profitable, that sort of thing. And then you go off, you do your work, you come back, hopefully as an improved trader. And one of my homeworks was the rule of three, because I sucked at it. And David pointed that out. So he sent me off. He said, go figure this out. And then you got to teach it. So hopefully I captured this correctly. And David, feel free to jump in. And I'll go ahead.
Gosh, I'm going to mute everybody, and then you're going to have to unmute yourself. people feel free to talk. If you want to unmute, you can unmute, but we'll start everybody muted. So, and John.
Okay, you ready?
Good. Yep. Go ahead.
All right. So since there's some new people here, I figured I'd retain this slide from my last presentation, and I'll go over a little bit about myself for anyone new. Like I say, it's the same slide as before for anyone that hasn't been here. But my name is Joshua Hunter. I am from Texas, the greatest country in the world. And I've been trading since about 2019 with intermittent success. And my goal this year, excuse me, maybe that is to level out my profits and losses into a consistent growth and profit. I don't want any more risk outs. I don't even want any more large loss days. I want consistency this year. That's my focus. And so my passion is obviously in racing V8 Mustangs. As you can see, here's an old pic of my Vista Blue one with white racing stripes and red brakes because USA. Hey, more importantly, as I get older, as I get older, I really found myself that I enjoy breaking down doors to places that I've never been during new stage. Trading is one of those things. And I like to reach back and help others once I break these doors down. Anybody that needs help. It's very, very important to me to give back. And one of the things that I really enjoy about this community, for example, is in fact, are these Wednesday night sessions, these lessons that everybody in the community gives on Wednesday nights. And it's a place that allows us to give back to each other and share what we have all learned. And I know I've benefited immensely from many of the prior presentations by other members of this community. And I'm very grateful to be in this position tonight similarly. So I hope everyone enjoys it and takes some new piece of knowledge back with you from the pain and suffering David made me endure learning this. In a nutshell, David asked that I give back what I learned from his rule of 3 challenge that he gave me during one of my hot seat sessions. And so what is the rule of 3? Essentially, as price moves around in a consolidation, the first retracement you don't trust, it's a price test. The second time it tests price, you wait for a confirmation. And the third time it could break and the likelihood of that probability increases, right? So that's going to be the nutshell. I'm going to go into the details here in a second. Importantly, how do you use this knowledge? You know, that's where everybody's like, well, how do I use this? And because that was the bird's eye view of it, I'm going to go into the details here in a bit in the following slides, but I tried to make screenshots this time instead of just talking to help visually demonstrate what I was talking about. I think that would be better. And I broke it down. Whoops, I keep hitting the wrong button. I broke it down into a process that I see by framing the consolidation with support and resistance lines, which we all know how to do, and a build, don't react mindset, keeping an eye out for M or W formations while you do this, and being mindful of my risk and exposure to the account, but always keeping break-even close. And of course, the goal of why everyone trades, profit, and follow up with the ride the wave, follow through after setting up for the rule of 3. And I'll show you how to do that. So in summary, I'm going to package wobbling, the rule of 3, and the ride the wave, and how they work together in unison to make money. Hello, computer. There we are. So support and resistance price test. And I went onto a chart and I found an area of consolidation and I started marking up to demonstrate what I was going to talk about. And that's all this is. And this part is super easy, right? You draw the support and resistance lines where you see the consolidation. And this is never exact, but I try to focus on the body close and where the majority of the bodies are. And then I outline where I see the first touch of price with a 0. Can y'all see my mouse?
Yep.
See, you got a support line, you got a resistance line, and it was, markets moved from consolidation to expansion to consolidation to expansion. We never know if it's up or down, but we know they do that. So this just came from an expansion and began its consolidation through here, and of course went into another expansion. But when it comes and does that, this line comes from a previous that I couldn't show, but this is where the other supports were. So when it first came down, this body didn't touch it. So I didn't consider that a 0. And of course it retested and there's a strategy around that. But when it touched with a body, That's when I said, okay, here's the price the first time it does it. So I'll mark that 0, right? And then of course, the first time it touches the other one, that's the 0. So now you have your range of your consolidation. So now you can start to play. And let's see. And when I say you can start to play it, that's where I mean you can start to wobble. You can buy off of these, you can sell off of these, you can buy off of these, you can sell off of these, you're wobble. And so the first time that it tests the price again after establishing, the 0 is the establishment. The 1 is the first time it tested it again. Sometimes it'll go down. Like I said, this isn't exact, but you still buy. And you don't trust it, part of the rule of 3. The first time it tests it, you don't trust it. So you buy off of it, so we go up. First time it tested up here, you don't trust it, so you sell. And it goes the other way, right? Or of course, the longer you're in this consolidation, the less likely that occurs up until point of 3. And so you would wobble just fine through here. Buy, sell, buy, sell, buy, sell, right? And buying lows, selling highs, taking profits at the action points. However, after a second test, which I mark with a 2, that would be these guys. Then I begin to look for confirmations, because the second time you wait, you still don't press it a little bit, but you wait for a confirmation. Is it going to break or is it going to come back down? And excuse me. So I still buy and sell, but not as risky as before, for example, because my risk of a breakout has become a little bit higher. And I'm also now on the lookout for patterns, in particular in these scenarios, M's and W's. So when I talk about building your position, and I move the chart a little bit to the left to show what you might see as you build, that way you don't see the whole consolidation like what we just saw. But this is kind of what you might be seeing as price occurs. So here you would see a W forming, right? And I drew the little W right here. You got this guy, this guy, this guy, this guy. And your first thing, oh, this is an awesome W. It's going to break. It's going to shoot up. I'm going to make all this. But you're only at 2. And that's what you got to keep in mind in these consolidations. You're only at 2. You need to wait for a verification, confirmation. But you can still build into a position at the action points in anticipation of the break, which would, according to the rule of 3, should happen more likely on the 3rd price test. So you do not react to the price. Don't panic and go, I'm going to miss this opportunity because the candle went a little bit above and buy. Don't do that. Not at 2. Really don't ever want to be that's panic. But don't react as the price jumps around. Remember, you're at 2. Only make decisions at your action points, which was back here, and you're in buys. So remember, your decisions at your action points are you either add to your position, you close your position, or you do nothing. You wait for confirmation, wait for price to move or something. But price action helps you make that decision, and that's an entirely another discussion. So watch for M and W formations. And so this is back to the full area of the price. And here you can see where I'm starting to find the M's W's. Like this one, this was the W from before, right? That I thought was just going to break out. I was just so confident. But because it was 2, the first W failed, right? And it went back down. And here you have this down confirmation. That's your confirmation on the point of 2, which is going to go back down. And really have a love-hate relationship with this pattern. It's very toxic because it's really not confirmed until it passes here or it passes here. And so you set up for one, it plays with your mind a lot, but that's beside the point. But my bias on this whole plan within this consolidation was up, and that's because of previous counts. When you come to the charts, you look, you kind of like, okay, where's the trend? Where's the bias? And you may be heavier in buys or sells. In this case, I would be heavier in buys because I believe it's going to go up. So I'm looking in particular for W's. And since I'm in this buy position, and okay, if it forms this then you're wrong, and you got to do a break even if it breaks down. But you just go ahead.
I just have a quick question. So if you could just explain where confirmation happens that it becomes an M or it becomes a W, and what traders should be looking for on that confirmation. Does that make sense?
Yeah, that is a really good point. Now, I think I was trying to get to it, but I was having
Okay.
trouble. My words.
Well, no,
Words are hard.
I didn't want to interject if you're if you have that
No.
in your presentation.
Yeah.
Just before you get off the slide, I wanted to ask that question. Do you know what I mean?
No, you're good. And that really relates to the building of your position and not reacting to price. Because if you react to price, the confirmation of that M, this M right here would not occur until this candle broke this point. And so if you start reacting, thinking, oh God, it's going to be an M, it's going to be an M, I'm going to start selling, you're now in losing positions. And same way with the W. This W doesn't exist until this candle where it broke the middle part of the W. That's your confirmation that it's a W. But you can't react to these positions because once you get the confirmation, it's too late. You missed it. It's gone. But you can build into those positions and use the bias and trend and that sort of thing to help you anticipate where you want to play.
What do you mean by build?
So like this W, let me see. Let me go back. This W back here was one I was anticipating because I had a buy bias, right? So I was building at this, you could build at this action point in a buy. You could build at this action point in a buy. And you're buying.
What's the definition of building?
So if you want to build into a position, like when you're wobbling, you may sell.
You're using the term wobbling, but not a lot of people even know what that is.
Oh, well. Wobbling is a technique basically where you wobble a consolidation. So
wobbling is a definition of wobbling is you wobble.
Does that. If you look up advanced words, it's the wobbling is the wobbling. But okay, yeah, there's a whole lesson around that. I'll try and keep it simple. In the very simplest of terms, you would buy here, you would sell here, you would buy here, you would sell here. You're wobbling this range in the very simplest of terms.
Let me help you out just a little bit. The definition of wobbling is basically where you're buying a little here, you're buying a little here. So you take a position, and let's just say you take one lot. Traditional traders, let's just say you take one lot and you break that up into 0.10s, right? And so now you have 10 trades. And when he's talking about building, he's talking about, I'm going to put one trade here, and then it breaks down. I'm going to put another trade here, and then I got a confirmation. I'll put another trade here, another trade here. So you're building to the position down. And then when you go to confirmation, you're building in and you have 10 trades. That's the quickest definition of a wobble, is to build into a position, because as traders, we have no idea where this turn's going to happen. And so is the turn going to happen here? Is it going to happen here? Is it going to happen here? And so that's why instead of just taking one shot at it and placing one trade, we break that trade up into multiple positions. And then when we get the confirmation, we build into it. And so I just wanted to set the framework and the groundwork so that everybody's kind of has a basic understanding instead of like, oh, I don't know what he means. So he's talking about building and wobble. So don't mean to interrupt your flow. I just wanted to.
Oh, you nailed it.
To bring that to the table.
Right? You said about when you get a confirmation, you build into it.
Absolutely. Cliff. We'll discuss that question tomorrow, because you should know the answer to that.
Hey, Josh, can I ask you a question?
Yeah.
Well, you were talking before, and that there was something in the previous chart that set you up
This
for
one?
the buys. Could you explain that?
What were you talking about? This chart or this?
The one before, you said that you had something that, is there something within the chart itself, or is it outside the chart that you were now anticipating a buy?
Okay, so
That was
overall,
that support line that you drew at the bottom, Josh. You had mentioned it briefly, speaking about to the left, how it was to the left in the chart that actually created that. I think that's what Joseph is referring to.
Yeah, because you see your support and resistance lines to data prior, and you can draw those out in anticipation of where price may turn, like what David was just talking. So you would, while you're trading this, you already have this drawn as if in anticipation of price maybe going down. So
So that's a major support or a support line.
it's just a support line for this argument.
For this example. Yeah.
Yeah, for this example, it's just a support line. Does that help? You haven't
Well, is
confused.
there something in the price movement that makes you think that the buy is more significant than the sell?
Yeah, I'm assuming for the case of this scenario that the bias is up, that the trend is up on the.
So
like the
let me, right. I think Joseph, I'm trying to just connect the dots. Joseph is asking, why are you in buy bias? The number one reason why he's buy biased at this moment is because of the rule of three. Because he's looking for the rule of three and it's the second attempt. That's all the definition that you need at this point. Looking further back in the history of the chart and expanding it will give you more information, but we're talking about the action of the chart at the moment, regardless of the previous action here, whether it was up here and it came down or down here, it came up. It doesn't matter because we're trading this action. Does that make sense? And the rule of three, the rule of three helps you to dictate what the next likelihood that the market's going to go. And so that's why he's saying for this example that he has on the chart, he's biased towards the buys because he's looking for the rule of three to materialize.
So it's not the larger candles on the buy side and the more candles on the smaller candles on the sell side.
Sure. So what you're doing, Joseph, and you're very analytical. So you're trying to find all the data points, and that's great and that's awesome. But what we're saying is we're only focusing on these data points, and these data points tell you to buy. Does that make sense? Now, there is a great question, and I'm going to throw this at Josh, if you know this question. But Glenn asked, why is the zero not on the candle with the fractal before the zero?
This one.
And I think this one. Well,
Wait, where are you at?
this one. I think that's what Glenn's asking.
That's it. I didn't draw it because this body didn't touch. So this to me was the breakout candle, right? And then that high probability retracement. But because I drew this support line off of previous candles, I waited for the body to touch it to make it a zero. And then the next body.
It's the top. That one, instead of zero, shouldn't that be one is what he's asking.
Yeah.
Yeah. And that's why I drew it that way. David, if that's wrong, then correct us.
So really the rule of three, I mean, Josh knows this. The rule of three is every time you get a touch point. So yes, you could have zero. This could be one. This could be two. And this could be three. Right. And I would probably draw it like that. And then, I would probably draw it like that because your white line, it's the touch points. You drew a light line and there's 3 touch points in a row. Right. So
this one big
in a chart pattern, it's a triple top. Right. And that's the rule of three. Right. So,
okay.
But you do see this all the time where you don't get this and this is 2. And the point that you're probably going to make is if this is a 2 with a W, then I kind of lean into it a little more. But that's probably the point you were going to make. I was thinking that's probably why you made it a 2 because it's on the back of a W.
Oh, that's a great question, David. So Josh, these touch points, were you looking at the whole in hindsight? Were you doing this with hindsight in your mind? Or did you actually work to look at it without that bias?
No, I was looking specifically for consolidation so that I could present the concepts
Got it.
and
Yeah.
and I literally had this debate the whole time I was drawing this out. I'm like, but that's the thing. This is not, there's no crystal ball. I'll steal from David. There's no crystal ball to this stuff. So it's how you see the market, how you draw, how you set up, where you set up. And as long as you stick to the basic rules of like the rule of three, of action points, of proper trade placement and those basics, then you don't have to be exact with drawing this out, for example. So if we look at it and we do, well, let's say we shift it. This is the zero. This is the zero, which makes this 0.3. Then this W is super high probability because we're at the third test, right? This was our confirmation. We went down. This is higher than this. This is a great W for that to be a 3, right? And so you would have your buys here. You wouldn't take them out because you're anticipating a break and that risk to reward in your favor. But I happen to draw it out like this to show the W and the M contradiction.
Okay.
So-
With that last thing in mind, Josh, are you going heavy on that bottom too?
See, I don't really, and I have a whole risk management area that I'll go into that. I don't really change my positions and heavy and that sort of stuff while I'm trading within the range because I don't like to go past my half. Like if I've got one lot to trade, I'll use half a lot in a setup. I won't use more than a half a lot because the market can absolutely say, how do we put it nicely? No. Market can say no and go the other way. And you are now in damage control. You're in fix it mode, but you have to have bullets to do that. So I would have a layer here. And then when this one's set up, because I wrote it as a 2. So let's go to this one as this was a 2. Then you're waiting for the confirmation that it's going to go up. You see, you never really get a confirmation it's going to go up, but then it just starts to go down. So even if that's a 2, so then your confirmation over here, because it broke this, downside. So if you had your buys and you're carrying it, you're now carrying them into this point. And let's see, this would be 0, 1, 2, 3. This would be 3. You're thinking this M might be playing, but it's not confirmed until it crosses here, which is outside of the consolidation. So that's one of the reasons I drew it like that. Because this was a little wonky, which happens all the time, but it's a little wonky, but it's still just a single test point. This whole block. It's just one test.
Mm-hmm.
Does that make sense?
I think so. Yeah, absolutely. I mean, David leans, I've noticed David will lean into that one where you have the one drawn right there. Like
This,
he's fearless all the times I've watched him on recordings. He just jumps. He said, I'm still leaning into that right there until it shows me otherwise. Am I wrong, David?
But yes, if you're saying I'm putting buys here because that's at the end of the price cycle.
Yes, exactly. That's exactly. I'm sorry. That's what
I
I'm
don't
saying.
do that. And I don't do
Yes.
that.
Yeah, no, I know you don't do that. Exception. We've had a lot of discussion in the Discord about that. Yes.
But where I would lean into, and I said this again, is like whether you say this is 0 or this is 0, it's really you're just counting the touch points, right? And what Josh is perfectly demonstrating is that I love that when a touch point is followed by a candlestick pattern, whether that's an M or a W, and those are the ones that I've taught, that I look for. If touch point 2 is in a W formation, then I would lean into that a little stronger as a higher probability that it's going to break, right? And if it doesn't, if it fails, then I definitely look for the next touch, right? Does that make sense?
which is on the downside, right?
Yeah, or the next touch on the upside. But I mean, I don't want to go further than what you're doing. I just wanted to add clarifying points, right? But so
Would it be okay if I asked a question?
no.
No,
Well, thanks. If this is covered later, let me know. But the problem that I keep having is I'll get into, like, say for example, some buys on the number 2 touch point, let's just assume for the argument, this is a 3. So
This one down.
no, the up top. So I constantly, and I know that I shouldn't, but I constantly get into, say I would get into buys there if it broke through. And I know that I'm not supposed to do that at the end of a price cycle. So would you be getting into buys at the bottom once you see the reversal happen? Like, is it too late once you're at the top of a W to get into any buys?
Okay, I absolutely have answered your question in the next slide.
Okay, thank you.
Wait,
So-
wait. I want to say, Sky, you said that you shouldn't do it, but you still do it.
I'm working on it.
Just kidding.
But hopefully with the presentation tonight, I'll learn it for real, for realsies, for final.
Yeah,
Okay.
it's addicting.
I'm working on it too.
Yeah.
It's addicting. We
I
need to
see
get.
it. I see it break the W. I'm like, oh, buy. It's gonna run. And it's like, if it's too late already, then I just need to know when to get into buys.
Do we need to start handing out
Build your
chips for how
question.
long?
Do not read.
Do we need to start handing out chips for how long you guys have gone without putting trades on the enterprise?
Oh, I love that.
I've got some munchos.
I think also the key point here, a key point is when we're looking at 2 as 2 is drawn by Josh, that waiting until, the bottom 2 off the bottom.
Okay.
Yeah. So if we're thinking long, that we're going against ourselves if we're waiting until it hits the high of the touch that he has on the high side of 2. Because now you've lost, you've given yourself, you've created a disadvantage for yourself. So if price does not confirm and moves back against you, now this is why when you're taking it at the end of that cycle, you're creating risk by taking that move. So by taking the earlier move, if it doesn't play out, there's a risk, but you've actually given yourself room.
Okay, let me see if I understand correctly. So as this plays out, like I'm buying here, probably 1 or 2 layers because it's the first test, but it's this 0 test. So it's going to retrace. This one's going to retrace probability wise. This is the first time. So I'm still buying 4 to 6 trades because I don't trust the first test according to the rule of 3. Even though it went against me a bit, the wobble rules, as David outlined, you're going to buy here to break even. But you see it shoots past this, it shoots past the 50, probably going to hold and keep my positions as this was just a little bloop. And I'm going to still anticipate the first test here. That plays out, you take your profits because the action point over here dictates take your profits, switch into sells for the wobbling of the consolidation. Here's your action point on the sells, right? But now you're at 2 on the support test. So here it's less likely that is a true statement, but you still wait for confirmations. See, I would still buy here a single layer, which is like 4 to 6 trades. Anticipation is just it's gonna go up and make.
Oh yeah, I'm not saying that you're going to change your risk your risk level at that point. What I'm saying is that if you're waiting to get into this position until you're at the high 2, then you've done yourself a disservice because now you've added risk to this.
Yeah, I see what you're saying. So you've
situation.
You're seeing this storm, right?
Right.
Like, okay, the odds of an in.
Well, but even if we're not doing that, even if we're not thinking that way, Josh, if we're just doing the wobble at this point, right? And we see in our mind's eye the 1, 2, 3 playing out. Either way, we're in on that too. At that point, if we're not buying on this point, we're missing several techniques. And
You're going to buy at this point.
I'm gonna just gonna interject you real quick. So you're also making a lot of assumptions that we don't have data on the chart, right? And so what I think we should do is just let Josh kind of finish his presentation and then come back and answer the questions because there's a lot to unpack in your guys' conversation. But I'm hoping that Josh will uncover it, and I'm really hesitant to kind of have a question and answer right now. So let's kind of wait for him to be done. And then jump back to it because there's a lot of things there's a lot of things in learning the rule of 3 that you'll need to look at. And I think that he's going to cover some of those things.
Okay. Hopefully I do. James trying to mention the whole thing.
No, it's all good.
Get back on track now, Josh.
Okay, but don't lose the question. See if we answer it, James. Okay.
Yeah, for sure.
So
Right
I mean,
on your question.
That's right. Write them down.
so I mean, the whole point of talking about building your position. Yes, you're wobbling the consolidation, but you are keeping in mind of this rule of 1, 2, 3 and your breakout. And so you still want to build for that. And so you would build once you start getting further into the consolidation. And and as you're watching for these M and W formations, because those really add confidence to a direction, you can see like this one was the one on the previous, it failed. This is the first W failure. And here's your 0.2 confirmation, right? It went down. You've got a confirmation, it's going down. That is a 0.2 failure. So it should test this point right here, but it doesn't. And so, before we get to that, now you see this M forming, right? And so you've built into a buy. You're starting to get nervous about it breaking against you and it coming down here. But you don't, that goes back to the not reacting to the price and playing out your plan. And the M is not confirmed until a candle comes below here. So even if it comes down here, you're good, still playing out the process. You would buy here. And if it broke, you should have enough bullets based on your risk management to catch the retracement, break even, and start another series of trades. But you're playing for a break up. That's what you've been planning in this process. So now when this happens and you have this 3-bar confirmation, which is a reversal signal halfway up, you now have another beautiful W that's formed. And so if this comes back up and hits here, there's your third hit. Now you've got a W, a reversal signal, and the third touch point, which the third touch point is where you play for a break. And of course, on this example, you have the break, right? Did that help a little bit, James?
Well, go ahead and just finish it out
Yeah,
like
just-
David
yeah.
suggested.
Yeah.
I like that.
Okay.
Yeah.
Okay. So that is, and that's how you play all that and you start to make your profits is when that break occurs. But I think it is important to talk about the risk management. And that's where I wanted to go into because I anticipated a lot of the questions like what we were just going through. So that is where many of us get in a lot of trouble. And you can take a real hit to your account at these points, especially threes. And if there's a fourth, like if we'd have drawn it the other way, this would be 0.4, not 3, right? But each time it goes past 3, the likelihood of a break increases even more. So your risk is also increasing. So you always want to keep the break even close of your positioning within that consolidation. And the way that I do it, is you want to look at how much of your position that you are in when you set up for that move. Like what David just outlined earlier, if you've got X amount of positions, you really don't want to be past half because you want to manage damage control and all that kind of stuff. You have to keep mindful of the account itself. So look at how much of your position that you're in. Oh, oops, sorry about that. Look at how much of your position that you're in. Setting up for a move never should go past 50% of your available position size, because had that W become an M and broke down, then you've got to have those extra bullets to mitigate that wrong play, the play that you were wrong on. And that's where so keep an eye on the zone next to you. And in that case, the zone up top's for profit, but the zone at the bottom is the damage control zone because you're building into buys. You're anticipating the W to follow through, not the U. And price could have easily reversed there and shot straight down. And if it is shot straight down and not turned, then that's the third test of the support. And so the same probability of the break that you were anticipating on the up now exists on breaking the below, but you're in box. So you have to have the bullets to pay for that on its first retracement. On its first retracement of price for break even. And at that point, your goal is no longer profit. You are out of the profit game. Your goal is break even and protecting the account, and then getting back into another position to do it again. And we've all seen it happen where it'll do this, and it'll come down, and it'll go straight down here, and then go right down into this next consolidation. But that's where that risk management comes. You don't want to build so many positions in here, but you don't have any bullets down here to pay for that and start this process over again. And so the experience has taught me to never be so confident in these plays. Like I drew this W out. I drew this other W out. It failed. Never be so confident in your play that you leave the account exposed to a risk out or max position size. And I stole from David earlier. There are no crystal balls to trading. This rule of 3 is not a crystal ball. It is a high probability setup that you can plan with. And you may see an opportunity as high probability, but it is not guaranteed. There is nothing guaranteeing this price to go up here. Nothing. It is just where you're playing and where you're expecting. So you play smart. You realize your job is more to protect the account, trade, make a plays, have a blast doing it. We've got a great community that harasses each other clearly, constantly. It's trading, but we've got a great community, and you can pass ideas and that sort of thing with each other. Like there's people in there that will draw charts. Dude, for example, he will draw a chart just a second as fast as he can chat with you. And he was like, here's this play. And there's a bunch of people with views on the market like that. In addition to your own view, which you saw mine, the views aren't wrong. That's how you see the market. The only thing that's wrong is if you're not managing your account correct and you're not following the process. You're not getting in and out to take profits. You're not doing proper trade placement, or keeping this rule of 3 in mind. That's the only thing you can do wrong. And the reason it's wrong is because it can set you up for trouble. But if you do it correctly and you follow the process, then the process will also get you out of trouble because you were wrong. Being wrong is not the problem. Following the process is where the problem can be. Does that make sense?
Write that last part down, Sky.
I'm sorry, what?
Of course not.
If being wrong is not part of the problem, following the process is part of the problem.
Okay.
I like that, Josh. Those were good.
Oh yeah, that was brilliant.
And I gave that to Sky because he's trying to work on this, right?
Yeah.
We all.
Well, so if I'm let me know if I'm taking over. But so when we're new at this and you get into a consolidation, it's almost like they warn you not to get into a trade until it breaks one way or the other. And I think that's what I'm struggling with, because when it's going up and down and up and down and up and down the consolidation, I keep on thinking that I should be trying to get in when it breaks out. So when it goes north of 2 on that leg, I am like, okay, time to get into buy. But what you guys are saying is, in this more advanced technique, I should be getting into buys at the bottoms before it breaks out.
Wait, so you're saying to buy low?
Well, what I'm saying is I don't
sell high.
What I'm saying is from a new trader standpoint, yeah. From a new trader standpoint, they tell you to wait until it breaks out before you move on it. And now that we've had some time trading and more advanced techniques, I should be buying at the bottom of the consolidation, planning for it to go up, meaning like kind of like a double bottom or at the bottom of the W. So if it's broken out, if it goes north, it's already too late to get in. I should have been in at the bottom of that. And that is a more advanced technique than what they teach us earlier. When you're in the consolidation, you kind of wait for it to decide where it wants to go, if I'm understanding correctly.
So yes. And Josh, are you okay with me? Or do you have,
Go ahead.
are you into the Q&A part, or you have more to cover?
I have the follow through with Ride the Wave and to kind of mesh it all together. But I think answering Sky's question here is probably important.
Okay.
And I can wait. It's all good.
No. So the thing that I talk about all the time is that when you're trying to evaluate where the market is going, the thing that we talk about in every single morning is, where is it going for the next 10 minutes, right? What's the next 10-minute move? And to gather up all the little pieces of evidence to support your theory that it's going to move higher is one. The rule of 3 is just one piece of evidence. But if you can find other pieces of evidence combined with the rule of three, it gives you a higher probability, right? And I'm going to just go through this. Josh, you got this covered. I apologize. We're just going to go through the really quick and all the pieces of evidence that I am seeing that says, yes, it's going to move higher. Obviously, the 1, 2, this is the third test, it's going to move higher, followed by this W that Josh called. The one thing that Josh may or may not have said, and I apologize if you've said this, and I know you talked about this a little bit, but is I always go with risk versus reward. What is my risk to my reward? And I know I talked about it a little bit. If I'm getting into buys here, my risk is high. If I'm getting into buys here, my risk is a lot lower. And if I'm getting into buys here, my risk is even lower. But if it breaks down, then this is not a W, this now becomes an M and it breaks down to here. But my risk is still lower because on the next pullback, if I had buys here, I'd much rather get out of my buys here than have to get out here. And so it all comes back to risk versus reward and your proper entry points, proper trade placements. James said, asked me a question. When do I lean in on this move? Because of the evidence that we're in a W, because it's the third attempt and because it failed to cross 50% of this. I think you referenced that. All of the key information points combined tells me that I'm going to smack the crap out of this for buys. Tells me that this is a high probability trade setup and the power of hindsight because I know it moved higher.
That's what I wanted to hear. I'm going to smack the crap out of this.
Basically, I'm going to get into a heavier position because I'm more confident that trade's going to work out. Right. And so I don't know I can't measure that, but I'm assuming that it's probably greater than 10 pips and move. We'll just make that assumption. And if I get a 10 pip move with all of these pieces of evidence that are supporting that theory, I'm making at least 1% on that move. That's just how I trade. Right. And that's what Josh is learning. That's what a lot of people are learning, is to combine all the different pieces of evidence. But tonight, we're specifically talking about the rule of three, because out of all of those pieces that I just talked about, which is the rule of three, the W, the 50%, and buying in right here, the rule of three is the master over all of those. Because it touched 3 times, it is most likely going to break. And if it fails to break off of this, and it gives me this W, it gives me all buying indications, and it doesn't, that means the seller is just dead. Nope. And it is going to go down. So if you're in to buys right here and it fails to break, you get out with profit. And so that's why buying is so important. Of going back to what we call PTPs, is just an acronym for proper trade placement. Bad here, better here, best at this area. So, hey, any questions on that? And I really don't want to steal Josh's.
I have something real quick, Dave. Well, and when you were checking on your buys down here, one of the things I've learned too is, yes, as price approached back up to the 2 point, because that is the third test, I would not be quick to get out of those simply because it was back to that level.
Yeah, right.
I would be
is ride the wave.
You hold through this.
Yes.
Right?
Yeah.
And that's
the chance.
Yeah. And I think Josh had that, but that's what you do. So one, you don't trust it. The first attempt, it's probably going to retrace. The second attempt, you wait, it doesn't. So it's probably going to come back. This is where you load up for the third test and you hold, right? So I think Josh talked about that, is you hold for the break. And then once it breaks, then you get into the ride the wave, which they'll talk about on the next slide. So,
and the reason, like, you wouldn't buy here through this process or this process or this process because you're only at 0, 1, 2. But because it did this, you have this confirmation of a reversal signal combined with W, and you know the next one's 3. That's why David's smacking in the buys.
Yeah, but I would probably still buy here personally.
Oh, here, yeah, you bought here just part of the process.
Part of the process, absolutely. Okay, I thought you were saying not to, but yes, because this is at the end of a price.
You're in a layer here because it's buy, it's sell, buy, right?
But you still don't know. You still don't, if you don't know what this data is right here, right?
Right.
Because if the chart is right, the chart is right here, I think you don't know if it's going to turn into a 1, 2, 3. And so you would just continue. You would say, okay, this is the end of I'd start building into buys for a test here for a bounce. Right. And that's why it'd be appropriate. Well, yeah. I doesn't want to call it an action point because people don't know what that is. We'll just say it's a support and resistance area. You're using all these terms, then I feel like I need to explain them.
You got me speaking jargon now.
I know. We speak a lot of jargon for sure.
Okay. Is everybody good on that? And I'll go into the follow through with Ride the Wave. Or is there any questions here?
Yeah. Duke's putting together a jargon course. Purchase that jargon course and study it. It's a different language.
It's true.
Keep rolling. It's a bonus to my course.
At 95, I'll finish this tomorrow. Okay, so
I've already posted this on Instagram tonight.
So
It's an extra $10 if you read my part.
Everybody's cha-chinging. Except for Josh. Hey, we're just piggybacking off your coattails, buddy.
But what about the Mercedes?
oh, he's back here. He lost. We left him. It's a Mercedes.
I'm messing with you. I don't know who it was that was messing with you like that.
It was Brandon, but I don't think he's here.
Brandon.
All right.
Even
Okay, we were just. Let's just get going.
okay, so here's how all this stuff comes together. And then this is where you're really playing for your profits, right? This is how you get those 1% or 2%. You get the breakout on the third test right here that you had planned. And you have to plan for it and place your positions to get there. You can't just react because that'll kill you every time. And it goes right into the ride the wave concept, which this is the wave. It's the breakout. You're riding this wave as it goes up. And the technical reason to get out of the ride the wave is when a candle closes body below the previous candle. So that technically this ride the wave is over from your buys here and your buys here. You get out right there at that candle. Everybody see that? So that's the one that says to get out technically. It is very important to get out of that. You do not want to be greedy because that is a reversal signal. That means the market is telling you, I could come back now. So take your profits right there from this play that you just did. These buys, get out right there. The ride the wave is over. You are now in another consolidation and you do it all over again. Get your 0 point, get your 0.1, get your 0.2, trade again. Because you can see, yeah, Martin, this was a really small ride the wave, but whatever.
We'll call that one an ankle slapper.
Yeah, this was an ankle play. But you just made all these profits, right? But now it's important to get out here and not be greedy. Because if you're greedy and you think, oh, if it'll just go a little more, I'll make all this money, right? You don't know that's going to do that. So consistently, you can't carry that. But the thing you can carry consistently is to get out when this candle closes below this. You get out. Because the market could come way down here. And if you're like what David just did, I don't know how to do it with mine, but if you don't see this candle beyond and you see this candle and it's jittering down here, you're panicking because you just lost all this profit. Now you're mad and you're upset and you're jittering. So you close here, right? You get a lot of profits. Then it's up here. Now your mental state is starting to get messed up and it could continue right back down in here and your whole play is gone. So you get out on the rules right there. and you let it do its thing, find your zeros, find your ones, and you trade the consolidation all over again. And even if you held, right? So let's say you held and you're like, see, I was right because it went to here. I made this much money off of this move. Yes, but you lost all the money wobbling, buying here, selling here, buying here. You lost all that money. So you get out of this trade, close it out, take your profits, start another trade, and play the game all over again. That's how you start to add, just keep putting money into the account. Does that make sense?
Yeah,
Time is money.
said.
Yeah. Time is absolutely money in this game. That's 1 minute of time, 1 minute of time, 1 minute of time.
Can you explain one thing I don't think before you get on here? So yes. So something that we've been doing lately, 100% everything you said, absolutely 100% agree with. But there was a question in the chat that says, could you just use a trailing stop? But what is another exit strategy as opposed to just getting out that you could deploy on a ride the wave?
So that's a little bit more advanced.
A little bit more advanced, but I'm asking to see if Josh can explain it.
I'll give it a shot. So one of the things that I'm working on and trying to do correctly is what you can do is secure these trades. Like here, right? Somewhere like right here. Because if you retest this, it could come back down. But you secure them and you know that's in profit. But you have to be able to compartmentalize that series of trades and get them out of your head. And then you go into playing this consolidation with another series of trades. We'll leave those alone. But as they go up into consolidations or into new structure, you can take those stop losses and move them to that new bottom of that structure and ride that wave as far as it'll go. But you have to be able to compartmentalize that mentally and then open a new series of trades and deal with the consolidation. And of course, keep in mind your risk. Now, if they're protected, so they're in profit, so you're okay, but they still take position size away from your position size to play this consolidation. So that's quite a bit more advanced, a little bit harder. But that's how I would do it.
I just want to see you could explain it, and you did a great job. Thank you, Josh.
Yeah, I got a question on that. On the management, on the trade management on that. I know that's a little bit more advanced, but how do you sort? Do you sort your trades, your positions? On how do you manage your positions through that process once you moved in, you secured your trades?
You want the truth or like the professional answer?
The professional answer, because we don't need to know what you really do.
I don't know, professional answer. So in Alveo, you can put a smiley face. Like somebody did it with comments today. I'll put a bunch of smiley faces on them because they're color and they're big and I can see them readily, whereas text is just not as visible to me. So I'll put a big green like smiley face on those trades and then try to organize them by time so that they're at the bottom and I don't see them while I manage the trades that I'm working on in the new consolidation. And you can't hit that big red X because if you do, you close it out. But yeah, I use smiley faces.
A good question, Joseph. Appreciate it.
Thank you.
So it's technical. Josh is bringing he's bringing us the bloop. And so, so if you guys know what the bloop is, and he's also bringing these smiley faces. So this is starting to get into Josh's repertoire. We're going to wait and see if we get some sound effects next time.
Those are you and
pew pew. That's when he buys. Every time he buys, pew pew. And when you sell, what's the next sound effect?
pew, pew.
Love it.
Okay, so that's the ride the wave. And basically, to sum it up, with these three powers combined, you have a profit machine. The wobble, the consolidation, set up for the rule of three while you do that, and then ride the wave. And you wobble the next consolidation. Set up for the rule of three in there, ride the next wave. Rinse and repeat over and over and over. And you pick up, because each of these, like for example, the weakness to the wobble is this breakout. That'll kill your wobbling. But you set up for it and you can take advantage of it, and you have a strength connected, tied to the weakness of the other technique, and you put them together. And then when they go against you, you do the win while losing, which is a whole other conversation, to break even back at the retest.
I love this, Josh. Thank you so much for sharing. I just want to add one last little point is that I get asked this question all the time from traders and say, what going back, and if you were just starting out, what would you have wanted to, what would have helped you as a new trader? And you just covered it. I've often said that I would have learned these 3 strategies or techniques. They're difficult to know. They're difficult to learn because you're not trusting on a indicator. You're not trusting on a moving average. You're not trusting on a Bollinger Band. You're not trusting on an HMA. You're not trusting on any type of indicator. You're trusting purely on price action and candlestick action. And that takes a little bit more extra time in the seat to kind of get that. But once you get it, you can trade any instrument out there. Right. And so go ahead.
No, I was basically just going to agree with you. This stuff, I mean, it's really simple. You could spew out the rules and you can write them down and you can follow them all day long, but it is the seat time and it is the experiencing them. And it's experiencing the little bloops that go right outside your perfectly drawn line and knowing, okay, could just be a bloop. I know to buy here. I know to do this, but you don't do it when it happens that first time or that second or that third or that 50th or that 1,000. It takes like 10,000 times for this to happen to you. And then you're like, oh, okay, yeah, I've seen this before. I'm going to buy in. Because I still think it's going on. Yeah, we're good. Or if it comes down, you buy, you break even, now you're trading down here. That stuff comes with experience and seat time. And I've had a few years of that. So, yeah.
Yeah. I mean, the point that I was just making is if I was a new trader just starting out, I would learn these 3 things. Well, there's a 2 there. These 3 things that I would learn and I would really study and get to know. And he's referenced some a couple times. We're not going to dive into them because we don't have time. But the number one thing I would learn is how to wobble, how to break up your trades is basically what wobbling is. I would learn the basics of the wobble technique. And then I would learn the ride the wave technique because he just said where the wobble breaks down, the ride the wave is strong, and vice versa. Where you can't ride the wave, you can wobble. And then the third one is purely looking for these high probability trade setups, which is your 1, 2, 3 combined with the M's and W's, and start to get 3 things that you really love and you really can just wash, rinse, repeat. Once you get this down as a new trader, you get this into your repertoire. Now it does take time. Once you get that down, you can trade anything. You can look at anything and it builds your confidence. And that's the number one thing as a trader that everybody is looking for is confidence, right? And the thing that will destroy your confidence more than anything is putting trades at the wrong spot. And if you don't know where the wrong spots are, that's where you should put your focus. And those 3 things will help you to identify where you should be putting your trades based upon the rules of price action, right? And so there's a lot of other things that we talk about, a ton of other things that we've kind of opened up the door a little bit. But it would take us forever to open up the door on everything, all the different little techniques. And that just comes with time in the seat, looking at it and saying, okay, so it didn't do what I thought it was going to do. Now what do I do? And you don't get that exposure until it's just repetition, right? And so that's the one thing that I love about what we do every single day. I mean, correct me if I'm wrong, Josh, but you're there almost, well, I don't think you've missed a day. Maybe you have, I don't know, but you're there most of the time. Yeah. Pretty much the same stuff, right? This is repetition. Just the market structure can change.
Different structures. It's different bloops. It's different. Well, that W failed. It's all the nuances of the game that you'll have to experience so that you can do this.
So let me ask you this, Josh, how is learning? Because when I met you, you didn't have the rule of three in there. So how has it helped you? How has it helped you to progress as a trader?
Actually, I can use this month's example. So while I had, and so this bleeds right into this last quote that I keep. That's pretty much the quote of my life, right? The meaning of life lies in your victories. Its understanding lies in your defeats. January and February, I profited all three accounts everywhere across the board. I was profiting my prop firm, my apiary, my traded fund. I was making money everywhere, right? Those are my victories. It's the meaning of why I'm doing this. But March, no. Defeat after defeat after defeat after defeat. The whole month I was in damage control. And one of those understandings from that defeat, like this quote suggests, was the rule of three. And of course, proper trace placement and action points, I focused on that too. But rule of three that we presented on tonight was one of them that I really focused on. And earlier today, I posted March. I posted a scene where I was losing all month, complete with the chart, the Excel file, and I knew I was off, but I didn't know why. And life hates me, whatever, who cares? That doesn't matter. What I think is important to pass in this question to you is that if you keep track of yourself, like what I do with a spreadsheet, some kind of journal, when you start seeing yourself become off, then, and the numbers will clearly show you that. The equity chart will have a downturn. Apiary has a nice equity chart. You just go pick your statistics. You'll see what's going on with your trade. It'll show that you're off. Pay attention to these things. Catch them as soon as you can, because you're a business, basically. You're a trading business. You take note when you see this stuff. Calm down first, because you're going to be upset at a loss. By the way, don't tell your wife that. That doesn't work. But to this point, calm down.
Don't
Take a
tell her
breath.
your victories either. That doesn't work either.
And
Then she thinks about what she can buy.
what can we do about it? But if
How's your
calm down,
trading? Fine. That's the answer.
if you calm down, if you're able to calm yourself, and then in the next trading session, take that break, take that 24-hour break. The next day, reduce your position size. This is what I did. I reduced my position size. I reduced my exposure to the account. But above all, I kept trading. I traded through it. It allowed me to really focus on the process, doing it correctly, doing proper trade placements, watching for the 1, 2, 3, this rule of three, setting up for it. And eventually, whatever rut it is that you're in, there's like whatever rut I was in that life threw me, you'll get out of it. And when that happens, return your trading to normal. It's business as normal. Your normal position size, normal layers, just get back in your game.
Right.
And this community and the sharing of knowledge, like these Wednesday night things, trading live every day for 2 hours in the morning, David hitting our head over and over and over and over about what you did right, what you did wrong, even the basics. I would not have recovered in a month's time otherwise. Because like last year, it took me 2 or 3 months to recover a down loss like I had in my Ron account this month. It would take me 2 or 3 months. I recovered it in a month, and hopefully I get better, and it's a couple weeks, maybe a couple days, and hopefully things improve. But that's how I did it, using the rule of three, using these things properly.
Amen.
I appreciate it, Josh. I love it. So just to kind of echo what he's saying and everything he's saying is, if you haven't, I know we have some new people here tonight, so appreciate you coming on. We do this every Wednesday. Tomorrow I'm going to be posting another event, a special event that we don't usually do on a Thursday night, but I feel like I needed to do a Thursday night event that everybody's welcome to. I'm going to post that in the morning. It's going to talk basically the how to navigate the growth challenge and to be basically successful. And if you guys don't know what the growth challenge is, I don't want to do a whole lot of talking about that, but it's basically for $50 a month, you get a lot. You take stages and you can grow a $5,000 account to $50,000 account as little as 6 months. And if you're interested in that, go to my YouTube channel. It's the first video that pops up. It explains all that. But for those of you guys who are in it, or those of you guys who want to know more, tomorrow I'm going to kind of do a deep dive with everybody specifically on all the new changes that are coming, that have been coming, just going over the ins and outs of the growth challenge and giving you guys some techniques that will help you guys, because in the growth challenge, you have to hit certain targets, and that's 10% in order to advance to the next level. Everybody in this group should be able to hit 10%. The only reason why you're not is because you're not hitting 1% on a day. So I'm going to help you guys to get to 1% daily. And in 10 days, you should be able to hit your growth targets. Speaking of that, Jerry, how are your trades from this morning looking?
Yummy.
Jerry? Did Jerry leave? Jerry left. All right.
We both need.
Oh, Dave, I feel
Yeah.
so bad.
Anybody else? No. Oh, you weren't there.
I got telemarketed tonight from someone trying to do that thing. And I kept on telling them, no, I'm already in the apiary fund. I'm already part of all this. I already do it. They're like, no. It's like, no, I'm already in it. And she's like,
Oh,
this is a different thing.
You answered a telemarketing call.
Well, it said trader on the street on it, so I had to pick it up. They were trying to tell me about this thing, and I thought they were trying to actually get me into apiary fund. And I was trying to explain to them that I'm already in apiary fund and trader on the street. So, whoops,
I appreciate
sorry.
it. No worries. So, anybody else take those trades with us this morning?
Yeah, here you go.
You did? Because they're pretty juicy right now. I'm just kind of curious. So I'm up,
I think it crashed.
like 400 pips on those and almost 3%. Anybody else take those trades that I told you guys to take this morning?
I did, but it was the growth count small, and I think it crashed.
Oh, you broke it?
I broke it, but you can see.
Uh-oh.
No, Alveo crashed. All right, I'll load back up.
Yeah. I followed up, made over 500 pips.
You're at 500 pips? Awesome. Okay. Everybody should be raising their hands that they took it, because I was like, you guys need to take it. So that's it. Kieran, the live trading every morning is in Discord. There's a link in there. You just have to go to daily live trading link. It's a channel, and that's where it's at.
There you go. Only got it to like 5.
Hey, but you're almost at 1% and in a small little position, right? So that's awesome. And this is your growth account. That's awesome.
I didn't want to risk too much because it was had a lot of volatility going down. But
yeah, no, it's awesome.
now they're secured, and I'm just going to wake up to something.
I had to leave early this morning. Did you guys recommend a trade to hold on to all day?
Yeah. So because it was at the low, because on the euro, you just, yep, you're messing with me now. Because of this drop, we bought down here, and I said, let's just put a little light layer on right here.
Right.
And just hold on to it. And then I was just going to say, for everybody that did that, you'll want to secure your trades. So good job, Josh. You want to secure your profits right now, and then just let it ride overnight, and let's see if we don't get any little bit of a retracement here. I'm looking for at least it to come up to here. But have a secured trade and be happy. Draw a green little smiley face if you get out, if it gets you out. So
I really want, like, if we could get Alveo to code when it hits your take profit, how Robin's, what's wrong? That would be cool.
yeah, Gil, I always use a zero take profit. That's just kind of how I trade. So when you come into the trade room, because I don't use a zero take profit because I want 50 pips or 20 pips. I use the zero take profit. It's another level up. If you're a new trader, I wouldn't recommend it. And I just get out at all the exit points that the market tells you to get out. And that could be 2 pips, could be 10 pips. It could be break even. I get out at where the market gets you out, but learning where to get out is another crucial principle. Because if you don't know how to get out, then you definitely need to be trading with 2 pips, because if you don't know how to get out, you could get all the profit and then give it all right back to the market. So it's just another advanced technique that we teach, is how to trade that. So good question though. All right. So if you guys, thank you guys for those of you guys who are new today. Thank you guys. Thank you, Josh, so much for doing this. Josh is one of our hot seat people, where every single morning him or another one of our traders trades with me live, and as they're learning, you're watching and going. I think we have Josh, you're in the hot seat tomorrow. So you're
Yeah.
up. We're going to trade it with you. No pressure. Just I expect you to bring your profits over to tomorrow morning. So if you want to see how Josh, he talks the talk. Now he's going to walk the walk, right?
It's in action. Do everything I just presented on. Yeah.
Yes.
It's
And
hard
so,
part.
so he's gonna actually execute this tomorrow morning, the rule of three, and so you'll see it live tomorrow morning. And then and then again, if you want some more information on the growth challenge tomorrow night, I'll post that link. We'll get after it tomorrow, at an hour earlier than tonight's meeting. So, but great. Any last questions or compliments or let's just right now, let's take a moment just to feed Josh's ego. So anybody
you,
else?
Josh.
Yeah, there you go.
Yeah, it was an awesome presentation, Josh.
Because he needs an ego boost after
does.
after March. But congratulations to really turning your trading around. You killed it in January and February, and you turned and you took some losses, but you recovered. And today was the day that you crossed that threshold for the month. And now it's not going backwards, it's going forwards, right?
But everybody has the downtimes. The trick is keeping your profits, surviving, and sticking to that process.
That's so.
So you come out of it
What does your ego eat? Eat
yourself. Your ego eats you.
Nick said that you're a piece of candy, or no, he said a piece of candy for sure.
or a cookie.
Every time I'm faced with a dilemma, I think to myself, what would Josh do?
What's the acronym for that? There will be a recording for tomorrow's event for sure. It'll be on Discord. It's not going to be, but tonight's event will find its way to YouTube. Every Wednesday night does. There's some really, really good ones. If you're just getting started out, I recommend, and Duke did a really good presentation. If you don't know what price cycles are, there's a great one for price cycles. I'm trying to think. Josh actually had a really good one. If you're struggling with psychology, there's a psychology one. But another one of our traders who's not on tonight, I don't think, Jasper FX did a really, really good one about trading in the box. That was a great one. So there's a lot of good Wednesday night tradings that find their way to YouTube. But it's always best if you're live, because then you can start asking questions. And for those of you guys who are new, you can see that this is the community that we'd welcome you to be a part of. Be one of the things I love. Josh, if you could just maybe show on your Discord really quick, if you can show that, and just a couple of things. Just Discord, open up the the server.
Yeah, I've always got it up.
Okay.
Let me stop the presentation. It's overshadowing. Okay.
So open up your Discord really quick. I just want to show a couple.
Yeah, just bringing it over. Here's,
okay,
okay,
so just a couple of quick nabs. So if you guys, a lot of people may or may not know this already, but right here is your inbox. It's kind of hidden. But Josh, if you click that, you'll go over here, you can see all the mentions. So if anybody mentions you, you can go right to it. You can jump right to it, and you can see that they're talking. So that's just a quick nab to see what's going on. But we also have Trade Talk. You can guys see that everybody is participating in that. Thanks, James. And then one of the things that we love is right here is this 1% a day club. So if you guys hit 1%, you track it. We have contests all the time, or monthly contests. Our monthly contest is on consistency. So not necessarily who can make the most 1% every day, but it's who can keep it. So we're running some contests on that, like 1% a day club. Everybody that hits that, usually right after our live classes, because that's what we shoot for every day, is to hit 1%. Then they post their 1% returns there. If you want some more information about the growth challenge, all that kind of stuff, we're doing that. And, but basically the live link, if you scroll down a little bit, this is where our daily live trading, the live link right there is for that. And then our recordings, we call them the hot seat, because it's a trader every single day. It's a different trader, and you can come in and see who traded, what they did. And there's a little quick a little quick, what we did during the day. Like, Jeremy had 4% that day. We made 1% for Brandon, all that kind of stuff. And so, just kind of give you a quick nav of how to get around, because I know if Discord is new to you, might be very, very beneficial. Go to the postings of go up and go where the 1% is. So this is really the daily performance. Click on the daily performance right there. So inside of here, we have the 1% club where you can post. You can look at Nick's trades plots and make fun of them. Just kidding. But we also post the best day ever. So I really, really push that if you guys have a best day ever inside of here, post it. What is your best day ever? Right? Because all we can do is better than our best. And we take the best and eliminate the rest. Right? And so we want to keep pushing to do better than our best day and keep tracking it. So good job, on everybody that's posting really, really great returns. Love it. Duke had that today. Congratulations to Duke. That's awesome. Best day ever. And then the community is starting to do trading tools. And this is a new thing. Go down right here, right there. Love it. Like if you have a calculator, an EA, something like that, or anything that you want to share with the group, come in here and you can grab trading tools, all that kind of stuff. And so we're building this as everybody's just coming in. So the community gets stronger every single day. And it's thanks to you guys that we're very active. Almost a little too active, Duke. Just kidding. He's number one. He's leading. He is number one by a long shot for leading the charge of having the most comments. So we do rank people and we have a leaderboard and all that kind of stuff. And I just found today, oh, you have it up already.
4,000.
I just found out today that in Discord, and I'm learning how to manage it, there's actually digital currency of coins that we can do, and we can give people, and we can have. And so I'm going to start opening up that of coins. And so referee Pete always says 50,000 points to you. And I'm like, no, 50,000 coins to you. So we're going to start bringing in. Yeah, I know. Right. So I just wanted to give just a quick overview. Congratulations for finding us tonight. It's our goal. My goal, and everybody else, that we're taking this journey together. And if you want to participate and be a part of our journey, we welcome you with open arms. Let's all get to where we want to be together. Right. And, I love the community. I love everybody in it. And we could just make it better. So, hopefully you guys join us and take part of everything that we have going on. And, with that, I guess we'll see you guys in the morning. Again, thank you, Josh, for your time. We went a little bit over, but hopefully you guys felt like you were fed and it was worth it. So appreciate it. No, that's Matt. That's me. I cut into your presentation a lot, so I apologize. So thank you guys. And we will see you guys in the morning for some practice what he preaches trading.
Great job, Josh.
Hey, yo, good night.
Good night.